Hello everyone and welcome into the channel. My name is Brent and in today's video we are going to be doing our M1 Finance recap of the week. Now it has been quite a few weeks of downtrend. You can see that the majority of our posts, past weeks have been red and we have dipped for quite a while. It's been at least 5 or so months since we hit a bit of a high of around $43,000. I think it was right around here. Right around 3 months ago, 4 months ago, we had hit $43,000. And as of that point, we really kind of trended between 43, even hit a low of roughly 38,000. So at a point, we went between 43,000 and change to $38,000 and change. There's about $5,000 difference there. Right now, in our last recap about 10 days ago, we were down at 41,570. I traveled. I'm in Germany right now, visiting some of my wife's family. So I'm recording this on my laptop here, but I do like to kind of showcase the journey. So if you guys do appreciate the weekly updates, I'd appreciate if you go down below, hit the red button to, subscribe, give it a thumbs up, and let's go ahead and get into the video. So we're going to be taking a look today at the M1 Finance portfolio. This is our main focus here. Number one, we'll go over the main overall return of the portfolio at this moment. Number two, we're going to take a look at the weekly performance of the portfolio. Also take a look at the entire S&P 500 overall, what sectors were strong, what sectors were weak, and take a look at the companies within those sectors that were strong. And then we'll go ahead and just kind of compare our portfolio performance to the main indexes. Then we'll take a look at where exactly our portfolio is sitting. I do have some current cash, nearly $760 sitting in cash. It has actually been quite a while since I've invested just because I've been traveling the last week and a half, 2 weeks now. I won't return till next weekend. And I do have some buys. I have 3 buys that I have set up. So we'll go ahead and cover what I'm planning on buying here also in this video. And then I think that's 4, right? We'll go over the current dividend income of this portfolio and where we're at right now. So that's what we're going to get in today's video. So number one, starting off with the overall performance of the portfolio, we're up a nice 56.28%. Now at a high, I believe we were up roughly 77 to 100 or so percent. If I had the mobile device, my mobile phone showed actually at a point we were up 100 and some percent. But I don't know how accurate that is. So overall, I'm going to go ahead and just say we're up 56.28%. We have remained in the green the entire time, despite the dip here. We did have some highs of around, let's see, if I could just kind of hit that high there of $44,164. And during this dip, you can see here that the dippiest dip right there was during the recording, right? We hit that $38,000 point a few weeks ago right here, 38,538. We did hit, that seemed to be sort of our lowest low point right there. 38,500 and some change was the lowest low before making any sort of recovery. Now, our top 3 winners here, which is really interesting. Apple remains number 1. That's probably never going to change as long as I have this portfolio. The 2 through 5 has been flip-flopping quite a bit. We can see that Main Street Capital is now in second place. This has been one that has been up and down all over the place here. It's nearly up 140%. And WB Carey is in second place. With REITs, it's really interesting to see BDC REITs in second and third place just because they're real estate, right? With these rising interest rates, the Fed just announced on Wednesday that they're raising rates 0.75%. So 0.75%. This is going to be the last rate hike of 2022 and hopefully just kind of maintain it, right? That's what's expected right now. That's expected. The last rate hike. If something does increase in the future, I believe that's unexpected and that would cause a little bit of a market dip, but we shall see. AbbVie is in 4th place, ABM Industries, Cisco, Pfizer. For a while, AbbVie and Pfizer had been battling out at 2nd and 3rd place, up about 120, 130%, I believe, but they have pulled back. So it's nice to see other positions kind of just battling it out. I like to kind of see that. Our worst positions overall, IIPR has took the lead as far as the worst performer of our portfolio, followed up behind by Clorox, Stanley Black & Decker. This is one I don't know. It's just continuously dropping. Long term, I don't see this position being really well. Or, it's only down $200. It's down 32%, but 32% is $200. I could probably sell this position. It's not a really big position. Reinvest that equity elsewhere and recover the difference. I don't like to sell on the loss, at a loss. I could also keep it, keep the shares, keep the dividends coming in, reinvest in the dividends elsewhere, or double down on it. But, Stanley Black & Decker, it's a very specific company. They sell specific tools, they sell specific products. They don't offer any sort of revenue services that is easy to generate income, revenue, pretty easy. Not that I know of anyways, but I think they're sort of like a really tough area company to kind of invest in long term. Clorox, I think that they're pretty good. Overall, they're down $416, but long term, they have a lot of really good products, services, but mostly products that are just generic household products that they won't be going anywhere. So that is our losers. Also, Digital Realty Trust, down 1.72%. Really no big deal there. So these are sort of like my double-digit losers here. We did have some other positions in the red in recent times. Starbucks was down like 14-20% at one point. Now it's net positive here. We can see JP Morgan was also negative. Waste Management was negative. Siggy was negative. Hormel Foods was negative. But a lot of these positions, kind of like these positions in the red, they flip-flop based on times. And we did average down on JP Morgan, Starbucks, Waste Management, Hormel Food. These are all positions that we averaged down when they were red, and they have recovered since then. So that is the overall performance of our portfolio. Jumping into the weekly performance here. Let's go jump into the weekly now. And also we'll take a look at the monthly because this is the end of July now. So congratulations, everyone. You've officially made it over the first month of the last 6 months of the year. Weekly performance here, we're up 1.99%, roughly $835. $800 in market gains, $32, $33 essentially. We've sat through X dividend dates that will pay us out in the future. Our best performers this week, Avery Dennison. This one was beat down not too long ago, but popping up very nicely. WP Carey, Waste Management. So this is one I had been averaging into here in 2022. Brand new position as of this year, and I'm really happy to see this one kind of popping higher. Utilities, Waste Management style, trash, recycle. That's not going to go anywhere. It's not like a dying industry. They don't have any competitors because guess what? There's one facility that does everyone's waste management normally in a region. So, you buy them when they're low and you keep buying them when they're low and they recover over time, because of the market swings. Our worst performers this week, Stanley Black & Decker. There's that one I keep telling myself, hey, I should have sold out of it. If I had sold out of it in the past when I told myself, I would have saved myself $100+ there in market gain, market overall losses. But I keep holding off. Siggy down 4%, but it's still net green. These positions here just kind of moving along. Avi and Clorox, part of our worst performers for the week. Now, how did we do in comparison to the market? Now, really quickly, market-wise, what were the strongest sectors out there? Now, this is a sector tracker. We're looking at the last 5 days. Now, the market was very strong this past 5 days here. The S&P 500 overall, 4.26%. So here we are. The 5-day change right here, 4.26%. You can see after the Fed announcement right here, hey, we're hiking rates 0.75%. Boom, took off to it was already up 0.5%, 1.5% on the day. Added essentially another percent on the day. Just continued chugging along Thursday and Friday. So yeah, very strong on the week. 5 days right here. You can see communications, Verizon, AT&T, not so much there. Discretionary, money flowing out there into discretionary, so that's up 5.22. Consumer staples, those have already been invested pretty heavily this year. Those are your solid consumer staples that, when times are tough, money flows into them. Energy has been, popping to some recovery. They had dipped a bit there for a little bit, but are making some recovery. Financials, JP Morgan, Citibank, all them, kind of in the middle. Healthcare, they've already done really well this year, so they're only up 2% on the week, still nice. Industrials, 5.74. Materials, 4.09. Real estate, this is one that kind of caught me off guard. With rising rates, we're up 1.5% over the last 3 months. Real estate here is still doing really, really well despite rising rates. Technology, 5.10%. So what's going to move the market is technology and healthcare. So these two, technology makes up, I think, like 25 to 30% of the S&P 500. So this being up 5% alone is really nice. Utilities up 6.51. So you can see here, let's go look at the heat map here. This is the last 1 week. So I have the positions out there. Meta. That's my not my biggest holding anymore, just because of the net loss. But it is down 6% in the week. That's because of earnings. Earnings, they came out and just didn't hit where they needed to hit, and they lost 6% on the week. Telecommunications, right? We're kind of talking about telecommunications. That would be your AT&T and Verizon, so this should be right in here. Verizon 3.92 on the week, AT&T 2%, but they're still down below $20. AT&T had been one of my holders. I was a shareholder of AT&T several years ago. I sold out of them around $34, $36. Never looked back. Not a position I would, buy into at this time anymore. So that is our telecom services right there. We can see the big FANG stocks, remove FANG. We're no longer FANG, it's just ANG. We have Microsoft, or we can name it Mang. So we have Microsoft, Apple, Amazon, Google, and Tesla. Nearly up, Amazon's up nearly over 10%. So double digits on Amazon, Microsoft, Apple, Google, and Tesla, all up over 5%. 5 to 10% there, very strong. We saw energy was the biggest sector-wise, right? 10.22% on energy. You can see a lot of this. Exxon, 11.31. Chevron, 13.59. Huge gains there. In the energy sector, real estate also popping up very nicely, between 2 to 7% there. Gains on the week. And healthcare, healthcare is already up very nicely year to date. If I switch this to year to date performance, you can see healthcare, quite a bit of green there in healthcare already with Merck, AbbVie, J&J, Eli Lilly. Energy is up really nicely already. So these sectors that have already been doing pretty nice besides energy. Energy this year is just on a different level. So that is the weekly performance there by sector and by the heat map. So S&P 500 4.26, Dow Jones 2.97, and NASDAQ 4.7. My portfolio always kind of sits between the Dow Jones and the S&P. I am not really too far off my highs, right? My highs were around 44,000. I'm at 42,800-ish. So I'm only down off my highs by around couple percent. Now, I wouldn't say probably 5 to 8% I'm off my highs. And the S&P 500 is still down 13.34. The Dow Jones 9.61, and the NASDAQ still down 20.8% year to date. So, the fact that I'm only up on the week 2% is completely fine, as I still haven't lost a whole lot overall during the downturn. Now, jumping into number 3, the activity for July. We're going to go ahead and just really quickly look at actually the month. How's the performance on the month? Just really quickly, because it is the end of the month. We reached the end of July. So on the month, we're up 3.87. If we look at the S&P 500, I'd like to take a look there at the 1 month, up 8.16. The 1 month on the Dow Jones, 5.85. And the NASDAQ here on the 1 month, 10.85. So that's crazy. It has had nearly an 11% return gain on the month, but still down 20.88% on the year. So that is interesting to see. Such a big gain, S&P as well, 8% gain on the month, but still down a whopping 13.34%. I still don't think we're out of the clear. A lot of people might be buying into this, being like, hey, did you buy during the dip? Did you buy during the recession? Did you buy those lows? I think, people are still going to have opportunity to buy on red days. I think that's still going to be out there, and that's still going to be an opportunity for, people out there. Yeah, quarter-wise, I don't actually track the quarter very often. We'll look at 3 months. Yeah, see, quarter down 0.04. Let's go look at the 1 quarter here. 3 months down 0.4%, and 3 months here. Whoops, I'm on a laptop here, so I don't have a mouse. I'm just trying to click. 3 months up 0.45. So on the 3 months here, I'm down 0.8%. S&P down 0.04, Dow Jones down 0.4, and the NASDAQ up 0.45. So not bad overall on the last quarter. So we've looked at the month, we looked at the year, we looked at overall. Now let's jump over into the activity. Let's take a look at starting at the very beginning of the month. On the 1st of July, let's go and just focus on dividends. Oh, this is it. We didn't really see a whole lot of dividends this month. Let's go take a look. Let's add this all up. So we are at 13.49, and that is from Merck. Okay, Merck paid us a nice $13.50 right there. We had Essex Property Trust as a REIT, $12.32. IIPR, that one's got beat the heck up, $19.33. Main Street there paid us 16 cents. They also paid us $8.39 for Main Street Capital right here. They paid us twice, kind of interesting. They also have Realty Income, $6.80. WP Carey, this is a whopping $21.78. That's a quarterly one. And we have Cisco, $10.74. And we have the other Cisco, $8.68. For a grand total for the month of July of $101.69 total paid out in dividends. So we did break $100 on a month, which is really nice. If we go to our dividend tracker here and I look down here towards the bottom, for July, I should have collected roughly $115. So, there might be some dividends that are still kind of rolling in here. This is M1 Finance. Sometimes the dividends don't fully roll, get paid and kind of show up here till, the next few days. So I may have something in here. There's 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 companies that, should have been paying out here in July. If I click here, I should be able to see these 9 companies here. Cisco, I saw that one. Essex, IIPR, JP Morgan, right? JP Morgan is one I didn't see in here. And that one should be paying me out $13. Where'd it go? Right there. Where is it? $13.73. So if I add $13.73, that gets me that $115.42. So JP Morgan, it should be paying me out. There should be a calendar around here. Yeah, see right there. JP Morgan should have been paying me on Sunday the 31st. So on Monday, Tuesday of next week, I should see that dividend kind of appear in my chart here being paid out on the 31st of July. And that'll have my grand total for the month of July at $115.42. Which is exactly what my dividend tracker shows. And this is a completely free dividend tracker. So if you guys are interested in checking it out, it is just called trackyourdividends.com. Very, very nice, interesting website, completely for free. Enter all your stocks in here. It kind of shows you when they pay out, how, the monthly payouts and such. So that is the portfolio here. And we can see here, I don't know if this is accurate. You know, I've bought a lot in my other accounts, but yeah, kind of continuing here. We haven't purchased anything else in addition within this account, so we're sitting here at 42,757. 42,757. Here we are. We go to holdings. Our portfolio is 42,750. We round this up to 7, so it's essentially flat, perfect on the dot. This portfolio is generating $1,224 in annual income. We're sitting at the very end of July, so 7 months are done out of the year. There remains 5 months. I would like to hit $1,400 to $1,500 of annual income. We still have another $3,000 to invest, roughly, $2,700 to invest towards 2022, the Roth IRA funding. So I believe we could definitely hit that goal of hitting, $1,500 in annual income. That is the goal for 2022. And let's take a look. I think that's everything as far as, what we're going. Now, what are we looking to buy? Sort of like the last step. I do have 3 things, 3 positions that I'm looking to buy. I am going to be averaging into Siggy Insurance Group, $258, JP Morgan, $300, and Digital Realty Trust, $200. So DLR, JP Morgan, so these positions, if you kind of notice their names, they're positions that are down here right now. Digital Realty Trust, I'm down 1.72 overall. So that is one I've queued up to buy a little bit more of. JP Morgan hasn't quite yet recovered, to where it was. This was up double digits. It pulled back very sharply and to the red. And this is just a position that had been down roughly $1,000 a bit ago, but I've averaged into it. In Siggy Selective, you can see all these positions right here are below $2,000 of equity. So my focus here is trying to build up my main positions to be about $2,000 worth of equity. I am going to have to thin down positions that I don't care about. So Stanley Black & Decker will probably fit into that bucket. There's probably a few others like Avery Dennison. This was up 80%, but not a position that I know a whole lot of, not a company that if you were to ask me, hey, what are some of their products? What are some of their services? I don't know. I don't know. But that's probably my 2 smallest positions within this portfolio. And IIPR, this is one that got beat the heck up, but it's just one of those areas it's a REIT within the MJ industry. They're having some times with their tenants paying and just other issues within that industry. So they're having quite a few complications with their industry overall. So that is going to be it for this recap video. If you guys are interested in seeing anything else covered here, definitely let me know down in the description down below or in the comment section down below. Again, if you guys have not yet subscribed, go down below, hit the red button to subscribe, make it gray. Hit the bell to be notified of all my notifications. And of course, if you guys did appreciate this video, give it a big old thumbs up. Would highly appreciate it. And that is going to be it for this video. Thank you all for tuning in. I will see you guys in the next video. Bye-bye.